many economic problems are we going to see which exceed anything that has ever happened in history before the public wakes up to what's actually going on here? Not only is the bond market in complete disarray, but business bankruptcies are up 54% in the last month. Corporate debt defaults have increased 176% in the same period. And we are now witnessing the longest yield curve inversion ever in recorded history. The yield curve alone has signaled the last 8 recessions. But when you combine this data with the fact that our central bank has completely lost its credibility with the markets, and gold is at a triple top in the last 3 years, which is extremely rare, it's best not to ignore the writing on the wall. We are all living and witnessing economic history unfold. And there are only a few ways that this can go from here. And you need to be prepared for all of them. I mean, this is really serious, you guys. The bond market has never sounded recession alarms for this long. So what are we hearing? A soft landing. Gosh, we might just avoid a recession altogether. Doesn't that? And the consumer continues to be so strong. This is the garbage that they're feeding us. But how many times can you be lied to when you do not know the truth? This is the truth. What I'm telling you today is the truth. And it has me very unnerved. And I'll show you why in a minute. Bear with me. Okay. Such an inversion telegraphed the last 8 recessions. And on Thursday, the market surpassed the 1980 record to hold that way for the longest consecutive daily stretch since Bloomberg's records began in 1962. Can you tell me what was happening in 1980? We were transitioning into a debt-based system. Real simple. So the indicators are flashing. They want you to think this time is different when it's worse than it was back in the 80s, to be honest with you. Look at all of the data. Bond traders bet on nirvana in new decoding of the yield curve. This time ain't different, guys. It's not different. Actually, it's worse. It's way worse because we are at the end of this currency's life cycle. But recession signal from yield curve may not work, the ECB says. Oh, good. Do you trust them? Do you think that they have your best interests at heart? Can you believe them? Because it is their job to keep you in these fiat money garbage markets. That's their job, to keep you calm and keep you in position that makes it easy for them to steal your wealth. Not okay with me. Ignore the signal at your own risk. I don't want anybody watching this video. I don't want anybody that's not watching this video to ignore the signals that we are given, because there's no recovery. If you miss these signals, there's no recovery if you lose all your principle. If you can maintain some principle, you can fight back another day. If you lose it, you have nothing to work with. Arian warns of massive corporate refinancing next year. Okay, little reminder, I know I do this, forgive me if I'm being redundant, I just really want you to get it. Interest rates, market value of the bonds. So what had been happening for 30 years was interest rates were going down, principal value going up, which also means that if there were bonds that were defaulting, if you had like an ETF or mutual fund bonds or something like that, and a bond defaulted because the prices were going up because they kept pushing yields down, you didn't notice it. We are not in Kansas anymore. What's been happening over the last, 14, 16 months is that yields have been going up really steeply. That means the principal value of the bonds are going down. So when these corporate bonds or government bonds or any bonds default, you won't have that to cover it up. It's going to be like the tide going out, and you see all the garbage. And we are going to see a lot of garbage. And not in the future. I mean, it's really happening right now. If you look at high yield equals junk. If you look at high yield, if you look at commercial real estate, there's massive refinancing needs next year. Massive. So that's the point of pain which starts to happen. Okay, when? Okay, Hilarion is telling you next year, and we're almost in October already. There are things that have to be refinanced in this economy that cannot be refinanced in an orderly fashion at these rates. In other words, we are all about to see massive amounts of volatility. Are we in the eye before the storm? I don't know, but take advantage of this opportunity to get yourself prepared. Click that Calendly link. If you don't have a plan, get it in place and start to execute it. Okay, this is the corporate debt wall that we're coming into. Let's see. In 2023, there's another, all this year, about 525 billion had to be rolled over. 2024, 790 billion. 2025, 1.07 trillion. Okay? And you see this wall, and then it goes on from there, but I don't frankly think we're going to make it much past there, which is why I didn't bother to do the rest of it. But, the Fed is doggedly determined to stay the course because they're fighting for their credibility. This is happening all over the world, that central banks, having handed their credibility away in June of 2022, are now fighting to get it back. That puts us in such a dangerous position because I don't think they see, right? Or they're ready for this next crisis. That's what this means. I don't think they're trying to kick the can down the road forever. I think that they only need to kick the can down the road until they feel ready for this next crisis. So what we could be experiencing right now, especially with their dogged determination to keep interest rates higher for longer, is that they're setting up the crisis that they know that they are creating. I don't know if the Fed is going to pivot, but even if it does, they're between a rock and a hard place. I've shown you that for years.